Hello, everybody. Good afternoon and welcome. I am Kinsey Grant Baker for Barchart, and we have a wonderful interview on deck today. So without further ado, let's jump right in. So question, how does a company ambitiously carve out a growth story for itself, even when industry headwinds are strong, even when legacy norms persist? That's what we're going to learn today, the story of how RAD Intel is working to buck those norms, seize opportunities, and scale. We'll get the details straight from the top in just a moment, but quickly, RAD Intel deploys proprietary artificial intelligence to enhance businesses' marketing strategies. It helps identify new or existing ideal customer audiences, devise content strategies, and recommend influencer messaging tailored to campaign needs across platforms. Simply put, it's all about identifying new audiences and boosting content ROI. And RAD is tapping into what I think is a really interesting and increasingly impactful part of this modern economy, the AI-driven future of marketing. And lucky for us, we're about to learn all about it from the co-founder and CEO, Jeremy Barnett. Jeremy, welcome to Barchart. How are you today?
Hi, Kinsey. The music that you guys have at the beginning gets me pumped up, by the way.
Oh yeah. I mean, how could it not? It's exactly what we need. It's like our walkout music, right? To talk about what you got going on. It's exciting stuff. Exciting music for an exciting conversation, hopefully. So Jeremy, before we get into the nitty gritty, there's a specific piece of news that you guys are here to talk about today that you're going to tell me about with the share price change. But before we get into all of that, into the details of your growth story and that share price change and the opportunity for investors, I want to start with a basic question. For anybody who didn't get to tune into our last conversation here on Barchart, could you tell me just a little bit more about RAD does? What's the ethos and how do you bring it to life?
Sure. Well, RAD it's an end-to-end marketing platform that encompasses all aspects of the workflow associated with any campaign activation. The key differentiation with our technology and product is we start with the strategy layer before we recommend any audience segments, personalities, meaning influencers or creators, or what type of content should be put into the ether to elicit the best possible outcome. So if you think about the world at its core and almost any business, bad strategy equals bad outcome. In order to do the things that we do, we had to tap into different data sources in the internet, things like Reddit, TikTok, X, all sorts of different disparate data sources. And at the end of this whole environment, we've trained our AI to understand the real world, real-time interests of the audiences, the topics, categories, and interests these people care most about to elicit the best possible outcome as it relates to any campaign objective. So essentially, we're telling you the things your customer wants to see, hear, and feel in order to get the best possible return on the ad dollars you're spending. And that's done at first and foremost before anything. So you have good strategy going into the campaign, and that good strategy allows you to pick the best possible personalities, which are also AI informed by our technology, to inform those campaign objectives. So it could be a celebrity, it could be an influencer, it could be a creator, but the idea is who's the message box, who's the voice, who's the personality, celebrity, whatever, that's going to deliver the best possible message to those audiences. And then the third is what should the content feel like, what should it look like, and what channel should it be distributed on. So the idea with our product and platform within the framework of a workflow is understanding without bias what you should do and why you should do it. And the reward for the brands, the Fortune 1000 brands that are using our product and the agencies that are using our product, at the brand level, you're getting better return on investment to the tune of 3 or 4x. As an agency, you have these campaign efficiencies that bolt directly into the P&L. So agencies are closing more business. They're getting a deeper, more extensive customer value because customers are renewing because of the differentiation our product and technology delivers. And third is we're collapsing the time frame needed in order to deliver for the different clients that they're working for. So all of these things have a direct connection to the P&L and balance sheet.
Yeah, it's super helpful, Jeremy. The vision that's coming to mind is that you don't want to be in that situation where you're just like throwing spaghetti at the wall and hoping that something sticks, right? We want to have a little bit more of an informed strategy. I'm curious if you could share any of the names that might ring a bell for people listening to this of companies or agencies that are using RAD's product.
Sure. Yeah. Well, Hasbro, we did 5 proof of concepts with Hasbro leading into this year. Those equated to an annual recurring contract, which we have a portfolio of brands. Most people know who Hasbro is, but what you don't know is Hasbro is responsible for Transformers and G.I. Joe and Peppa Piggy and Monopoly and a lot of the legacy games and toys that we all grew up loving or love today. So Hasbro is an important client from a brand direct perspective. We work with clients like Sweetgreen on the we'll call it food space. We'll call it modern food space. We work with clients like MGM. In the fashion space, we've got activations through our agency partner network with the North Face, Urban Outfitters, Anthropologie. Through our agency network partnership, we have several activations in the beauty space. So we have Glossier, Fenty, Sephora, Home Depot on the big box retail side, also through our agency network, Procter and Gamble. So a lot of these things are as a direct result of one win sort of snowballs into another win. We have a very small sales team here. We're obviously scaling, but we're scaling our growth strategy around buying small and medium-sized agencies, which we can unpack here in a second. But the most important component is the one common denominator when you look at all of our clients, because we're spread out across entertainment and fashion and beauty and big box retail and toys and gaming, is number one, most of our customers are Fortune 1000 brands. And these are bigger brands that have a breadth of customers and different audience segments within that breadth of customers that love the brand for one reason or the other. Hasbro is an interesting use case because every one of their brands, Peppa Piggy, for example, is considerably different than Transformers. And a person who loves Peppa Piggy is certainly different than the person who loves Transformers, right? So the idea is understanding the things your customer cares about, the topics, categories, and interests that motivate your customers to take action as it relates to the campaign and objective associated with that campaign. And one of the beautiful things about the way our tech works is we leave the hand in the marketing, we leave the pen in the hand of the marketing practitioner, meaning we're not replacing marketing teams, we're making marketing teams stronger, faster, and better with unbiased information that they can use to deliver outsized returns, whether it be at the brand level internally or whether it be with the agency on behalf of the brand.
Okay, very interesting, Jeremy. And we'll speak more specifically too about the case for investing and the opportunity for anybody listening into this conversation in just a second. I would love, before we get to that though, to talk a little bit about the big picture. You know, as you've introduced what RAD Intel is all about and what you offer to the partners you're working with, a lot of headlines come to mind for me hearing these explanations that you're giving about the way that ad budgets are shrinking, that dollars are getting spent elsewhere, that we're diverting things to different places, right? And a lot of this is because, economically speaking, when we look at the macro, it's uncertain out there, right? We're seeing headlines all the time, across publications about who knows what's going to happen in the coming weeks and the months and years ahead. So I'm curious about how, in the face of some of those macro realities for marketing and for the economy more largely, how do you engineer something like, RAD scaling to the tune of 1,600% growth when all of this is still happening? Tell me a little bit about how you've positioned yourself in this broader marketing and marketing tech space to make sure that growth is still a possibility for you.
Yeah, so great question. So that requires a deeper understanding of the marketing space. I'll give a quick sort of overview. So brands are becoming smarter. They're realizing that a lot of the agencies that they work with have incredibly bloated teams, which means bloated agency fees, and you have a lot of people doing a lot of things. Some of it's strategy, some of it's content creation, some of it's content optimization. All of these different folks make up a quote unquote agency environment on behalf of a brand. And when you think about that, brands are now realizing, well, okay, we're spending too much money here, we're spending too much money here, we're spending too much money here. We want our money to go into eyeballs. So if you look at the marketing platforms that are out there, Google, for example, Meta, for example, these are machines. So you put $1 into the machine, and depending on your targeting, you're going to get so many eyeballs on the thing you're looking to attract. So brands ultimately want eyeballs, and then a lot of times they want the right eyeballs looking at your product to elicit some sort of an outcome. So if you think about that, the value of putting the right amount of money into these machines, the Googles and the Metas of the world, to elicit that is really, really important. And then you need expertise, and you need creative intelligence, and you need to have strategy, and you need to know what you're doing. So brands are starting to get smarter. They have these internal teams, and agencies, they don't have a choice. They have to adapt. They got to become smarter. They got to become faster. They got to become more differentiated. And they cannot come with the same old, like 3 year ago old thinking of like, hey, like you're going to spend 12 million with us this year. 6 million is going to go into ads. The other 6 million is going to go across a bunch of really expensive executives and really smart strategy. And then when you realize how the whole world works, even the really, really good strategy is peppered with bias. So when we designed our technology, we said the most important component of everything we do is good strategy. We have to make it easy for people to pull out good strategy out of our product and platform. And then we have to make brands be more efficient, and we have to make agencies be more efficient. So we started our business model before everything started changing. This was our business model. And oddly, with good strategy, it doesn't really matter what the market is doing, whether it's going up or going down. We've been scaling throughout because good strategy means a brand that wants to be more efficient, that has an internal marketing team, they're going to use our product to deliver a better ROI on the marketing dollars they're spending. Now, a lot of brands still like to have an agency handle the different programs for them. And our technology in that context is doing the same thing our technology does. It just has really smart marketing practitioners that work at the agency on behalf of the brand, delivering the goods. So no matter how you slice it, our product is designed to be successful. So the net effect is, while there's a little bit of uncertainty in the market as a whole, RAD's product is built for whether people are spending a lot of money on marketing, a little bit of money on marketing, they want to make sure it goes far. And we're at this really sort of interesting intersection, whereas if a brand has an internal marketing team, they can use our product very successfully. Or as an agency servicing our brand, it's a competitive differentiation, and it makes the agency even better and that much more competitive when trying to get those big 8-figure budgets that are typically associated with the Fortune 1000 clientele.
It's super helpful context. And I think it puts us on this path of differentiating RAD from some of the more legacy agencies, legacy marketers. And while we're here, I would love to get your perspective on general consolidation in ad tech specifically, but in the advertising space more broadly as well. We had news recently that Publicis acquired Captivate, the influencer marketing platform, in a deal that valued Captivate around $150 million. Knowing that consolidation like this is something that has become relatively normal in this market, what does that mean to you and to your business? How do you interpret news like that?
Well, I mean, look, it all is exciting if you think about it, but Captivate from us, from our perspective, is an interesting example because it's an example of a workflow influencer CRM that does what it's supposed to do, but there's a strategy layer missing. And that's, if you know our product and know their product, that's not me basically talking bad. It's just a fact, right? If you look at Influential, they were acquired last year by Publicis, and Influential is more of a services company. They've got some technology layered in there. But at the end of the day, you're acquiring these companies. They've got books of business. And from my perspective, better representations of comparisons are these AI-informed or AI-based technologies like Cohere, like Runway, like Jasper, Hugging Fair. These technologies that are trading at anywhere from a 20 to 40x multiple that ultimately impact the way you activate and do things at the P&L level. So we have a services arm of RAD that's had to be in place in order to get proof of concept, in order to get adoption, and in order to get people to buy our product. And one of the things that we always talk about is AI as a tagline in your marketing pitch means absolutely nothing, especially today. We're almost numb to it. You have to have commercial application. And when people use your product, because of the competitive environment, and there's really smart people that work at companies like Captivate, and there's really smart people that work at companies like Influential, and then WPP and Publicis and Omnicom, one of our larger agency clients, there's really smart people that work at all of these agencies. So if your product is being used, you have to assume that you're going to be in a hyper competitive environment against the smartest people in the room, evaluating your product against all of the other things that are getting pitched out there. So it's unbelievably difficult to break through. So what we came up with early on was like, we're going to go the hardest possible route first, which is not worry about what influencer should or shouldn't be booked, not worry about what we think your strategy should be, because we're analyzing some historical performance as humans. And we're going to put a reliable infrastructure around creative strategy to identify the topics, categories, and interests your audiences care most about today. And what we found is the product can be used for influencer activations. It can be used for celebrity activations. It can be used for brand safety. It can be used for product launches. All of these things make up like kind of a nice cornucopia of the marketing ecosystem as a whole. But good strategy at the beginning of any high quality marketing campaign is what drives success of the marketing campaign. So we lean on that part of the differentiation, and it's been working well for us.
Yeah, definitely. I appreciate you sharing that, Jeremy. So, we are talking today with a specific piece of news in mind. We're talking before a relatively significant moment in this continuation of the growth strategy and the growth story that you've explained a little bit more today. The share price is set to change tomorrow, May 29th. Tell me a little bit more about what this share price change means and what the general investment opportunity is for anybody who might be listening into this conversation that we're having today. Why should they care, and why should now be the moment?
Well, I mean, we've got some people that have invested like 14 times since we were just a little RAD. And 1,600% share price growth means we're doing something right. But I kind of look at it like it's all big one machine. So there's all the traction from the customers, traction from a customer on a one-off basis, triggers recurring annual revenue from that customer, recurring annual revenue from that customer triggers shareholder confidence, because shareholder confidence is typically dictated by the revenue your company is producing, and shareholder confidence triggers the share price going up. So we've got this kind of like machine that sort of is supporting itself, all on the basis of us having a world-class product and a team that's really hyper enrolled into the success of the public adoption of this world-class product. So none of this stuff happens unless we have a product that customers want, that customers are going to buy, that ultimately when they buy it, they're having a good experience. So that's most important, point number one. Point number two is with investors, if we believe in our mission, we've had this unique way of being able to build with this community of 7,000 investors that are supporting us, with the clients that we're servicing. So we have the investors supporting us, and we have been able, because as a result of the support from our investors, to enroll our customers into the different feature sets that are solving really important problems in their workflow environment with artificial intelligence. The value of doing this with clients like Hasbro and Omnicom, I cannot understate. It's so important, because you're not building things hoping it's going to be adopted. You're building things with your customer giving you input during the build out process. So that feature set build out process and getting our customers to enroll into the adoption is a direct result of having this community of investors supporting us. The third is we don't just have a community of 7,000 investors. We have some regular folks, just like regular folks you would think. Then we have investors and insiders from Google and Meta and Amazon and YouTube. So we have some somewhat sophisticated money there, I would say. And then we also have Adobe as an investor, and we have Fidelity Ventures as an investor, and we have some local VCs in both Canada and Los Angeles that are investors. So we've got this mix of people that are supported us that really are a representation of all sorts of different types of investors. None of this stuff matters unless we build a sustainable company, unless we have a product, like I said, that people want to buy, and we execute as leadership. So when looking at RAD, I think the most important thing, and this is what I look at, is what does the leadership team look like, and what's their experience, and why should I care? Because if you know anything about building a company, it's very hard. There's ups and downs and ebb and flows. It's not all roses and pom-poms. Sometimes it's really, really good and you're at an uptick, and then sometimes it's really hard, and you have to be able to lean on the people that are around you to overcome incredibly difficult challenges. So I've got a co-founder completely focused on operations and product. I wouldn't be able to do the things that I do without him. He wouldn't be able to do the things that he does with product without me. That's critical. We have a very supportive board of directors. Our chairman is the former vice chair of Brookfield Asset Management. And then we have another gentleman on our board who's acquired over 230 companies, who's helping us with our M&A strategy. And all of these things equate to, we have very ambitious growth plans. And these growth plans bolt right into our AIBO strategy, which stands for artificial intelligence buyouts, which essentially means we're looking to grow through buying companies, resulting from the product adoption that we've seen with both the clients and the agencies that we service.
Yeah. So when we have a conversation like this today, it paints a clear picture of what the opportunity potentially is for people who might want to invest. When it comes to any changes that will happen tomorrow, I know we've got a share price change, and I believe there's also a bonus for bonus shares or volume investing kind of perks. Can you explain
Yeah.
just really briefly what that means and what people should know about that?
Yeah, we typically change the share price on the heels of news. So there's been a lot of news lately, so the share price is going to change, and you can just kind of look at the history there. It's all public knowledge if you'd like. And with respect to our bonus shares, you can earn as much as 20% bonus, depending on the size of your allocation. So we have these things in place because number one, a lot of the investors that support RAD are repeat investors. We take investor relations as a company very seriously. I do look at the 7,000 plus people that are supporting our mission as a critical component to the reasons why we're successful. Kinsey, you've been in startups, you've been early at companies. The startup is as good as the blood in their veins. Blood is blood in the form of money in the bank. Right, so we're very healthy. We have not just a good amount of revenue, but we have a good amount of investment capital that we're using very smartly to continue to build what we think is not just a sustainable business, but a leader in the space. And none of this is possible without the community that supports our vision.
Yeah, awesome. And one last question on the vision. I understand RAD has secured the NASDAQ ticker RADI. What does that mean? How does that factor into the growth story that you've been telling us about today?
What it means is we are hyper focused on creating liquidity for our shareholders. There's certainly a path to RAD going public. We're going to always make decisions based off of what we think is best to create the most shareholder value. I go back to this all the time. Most importantly, before we get ahead of our skis, we need to make certain 1000% that we're building a sustainable business that has traction, that has a product that customers need to have. All of these other things have a funny way of taking care of themselves. That said, we're capitalists. Leadership is hyper-focused on not just having a legacy moment for the people that are working here at RAD, but for all of the shareholders. So myself included, I'm 50. I'm no spring chicken. My partner is 50. Both folks on our board are over 60. I say these things not to date us, but we are looking at this as something substantial. And as far as when we go public or if we're 100% going public, the SEC does prohibit us from giving any sort of guidance on that side of the business. Just know that we have the infrastructure in place and we're laying the groundwork to potentially list on NASDAQ. We're also looking at all sorts of different M&A opportunities as we continue to grow. Like I said, I always repeat this. If we continue doing the things that are important, build the product that people need to have, the revenue comes. When the revenue comes, the traction is there, the investor confidence is there. There's obviously a market for what we're doing at the consumer level, at the investor level. We have over 7,000 investors, probably closer to 8 now. So we're just going to continue winning, and we will figure out when the time is right what the next best move is to create liquidity for all shareholders.
All right. Well, seems like, as good an answer as any to end on. Certainly a lot of exciting stuff ahead for you and your team, Jeremy. I appreciate you taking the time to stop by and explain more of what you guys have got going on at RAD lately. So thank you so much for being here and for answering all of my questions.
Thank you, Kinsey. It's a pleasure being here as well. I appreciate it.
Of course. Thank you all for listening. This was Jeremy Barnett, CEO of RAD Intel. I am Kinsey Grant Baker, and I hope you enjoy the rest of your day. We will see you next time here on Barchart. Bye.